Welcome back to CMQ Investing. My name is Chris Franco, and this video is all about Nvidia versus AMD. What is the best stock between the two? Now, the reason I bring this up, I'm really bullish on Nvidia. I think Nvidia is a winner, even despite the fact that it's had a huge run already this year.
Nvidia continues to amaze us. What else do you say? It's almost 740 bucks. It was just crossed 700. Now it's 740.
By the way, whether you are an Nvidia shareholder or you are someone who is just interested in this business or stocks more generally, I hope you'll follow CMQ Investing here on YouTube. It would mean a lot, and I really do appreciate it. One of my close friends told me that he bought AMD because he felt that, well, Nvidia's already had this huge rise. AMD has more room to grow, and given that he wants exposure to this AI revolution, he thought AMD was the better play. Now, no one can predict the future, but here's why I don't think that strategy is a good play and why I'd rather go all in on the winner versus try to pick the number 2 or number 3 with hope that they do a lot better in the short to midterm. So let's take a look. Look, I put this data together using a tool that I subscribe to called Finbox. That's not an endorsement. I don't get paid to mention that. I just want to make sure I cite where the data came from. Looking at AMD versus Nvidia, let's start with revenue. Revenue from Nvidia, that's great by itself, and Nvidia has far greater revenue growth than AMD. Next up, with gross profit margin, considering they're both in the same category or sector, this is, I think, a very comparable thing to look at. 70% for Nvidia and 50% for AMD. It's clear who's the winner there. Same thing goes for operating income margin. Now, PE ratio forward, clearly a 58 or a 48 for that matter, is not exactly cheap. You know, you're not getting a deal. PEG ratio, but we'll come back to that. But let's look at return on equity. 69% for Nvidia versus 2% for AMD. Return on invested capital, 46% for Nvidia, 1% for AMD. Return on capital employed, 52% versus 1%. Cash from operations, you're looking at close to 19 billion versus let's round up to 2 billion. Same thing with levered cash flow, 17.5 versus 1.1. I also want to look at the CapEx, 1.3 billion versus 546 million. And if you compare that as far as how much cash flow these businesses gush out to put up 1.3 and getting back, let's say 17.5, you know, that doesn't make this difference that much of a difference, because if they could spend 1.3, what would they get back? Meaning AMD. Piotroski score, or Piotroski, I don't know if I say his name right. This is something I recently became introduced to, and it's not a substitute for doing your due diligence. So as you see here, it's a score developed by Stanford accounting professor Joseph Piotroski to find companies with healthy liquid balance sheets, profitability, and operating efficiency. Nvidia scores a 9, AMD scores a 4. I mean, this is a beatdown. You know, with the popularity of AI and AI stocks, and I think, by the way, the popularity is justified. AI is changing everything, but we have to think for ourselves and say, well, is this really how you invest? Do you invest by finding, you know, a big sector or industry or, you know, theme and bet on that?
Absolutely.
Or do you do something else? And that something else is, do you find the companies that have durable competitive advantages that are clearly the winners that can continue winning, and you invest in those? And I think for me anyway, the answer is the latter. You want to find the winners. And it reminds me of something that Warren Buffett said back in 1999, which was published in Forbes, but it originally came from a speech that he gave at the Sun Valley Conference. And he said this: the key to investing is not assessing how much an industry is going to affect society or how much it will grow, but rather determining the competitive advantage of any given company, and above all, the durability of that advantage. The products or services that have wide, sustainable moats around them are the ones that deliver rewards to investors. Nvidia definitely has moat qualities, but do you think Nvidia has a durable competitive advantage? Let me know in the comments below. I'd love to hear your thoughts. I'm curious how my ChatGPT will look at these numbers and what they will say about these two companies. So let me show you a little way I did this. I said, you're the stock analyst expert AI, and I'll provide you with data to analyze. You'll respond on guidance on what is a better investment. Nvidia shows a revenue growth of 57%. That suggests that Nvidia is expanding much more rapidly and potentially capturing more market share or entering new markets successfully. The return metrics show that Nvidia vastly outperforms AMD, which indicates it's using its capital more efficiently to generate profits. Specifically, the return on equity of 69% compared to AMD's 2% highlights a substantial difference in profitability relative to shareholder equity. Now, this is really interesting and why I wanted to come back to this. Nvidia has a higher forward PE ratio of 58 compared to AMD's 48, suggesting the market may value Nvidia's future earnings growth more highly. However, Nvidia's PEG ratio of 0.42 compared to AMD's negative PEG ratio indicates Nvidia's price is more justified by its earnings growth rate, making it potentially a more attractive investment on a growth-adjusted basis. I want to come back to that. Thanks so much for watching the entire video, guys. If you haven't already, please subscribe and check out some of these other videos that I think you'll like. Talk to you soon.